TAQ Capital, technical analysis quickly.
This is not financial advice. I am not a financial advisor. Before taking any action based on the information provided on this channel, it is recommended that you seek the advice of a professional licensed financial advisor.
Let's do this.
All right, welcome back to the channel, everyone. I got a quick video for you here on Bitcoin, and yes, I'm actually going to try to make this one quick. I know some of my recent videos have been a little bit longer. We're currently in this orange symmetrical wedge, and we've changed the shape over and over and over again. So if I grab it here, this is what we originally had going on, this white W. It hit here, came down, and broke up and out. But then with this new hit up here, we had to reshape it. Then when this became a 3, this could no longer be a 4, so this became our 4th over here, and the lines look like this. At which time we had our breakout right here. So then when that broke out, we had to shift this up to incorporate that, which meant we were now shifting down, and we incorporated that. So it looked like this. So we came down, bounced off here, and we broke up and out. And that's what all of this is where we currently are right now. So now if we do the exact same thing again, and we move this up here, the orange line, then we should have our 4th hit somewhere down here. It could be up here. I mean, I'm not sure. But then we should have either a break up or we'll continue to break down. And then we can keep redrawing the symmetrical wedge. So because the symmetrical wedge can keep being redrawn, we've got to look elsewhere to get better details. But not that we don't have good details. If we just move this up, we've got our 1, 2, then 3 over here. We need a 4th. So now we're coming down. I know that we're running up here right now, but we need to come down and hit this orange. So that's coming at some point. And you can also see here in the Ichimoku cloud, the separation between the Tenkin and the Kijin right here. This is going to bring these candles down into this spot. So that's coming too. If we jump up to the 2 hour, you can see that there's starting to be a separation. If this one stands up at 4 o'clock, that'll be more of an inclination that we're going to be coming back down. And then the 3 hour, 3 hours doing a similar thing. So I think it's going to be a slow process down here to the orange. But looking at some other wedges first, we also now have this red wedge developing. And that one looks like this. We had our first hit down here, came up, second hit, third hit, 4th hit, and now it looks like we're doing this swooping to break up and out, but we may also break down and go out. And based on what the Ichimoku cloud is saying, it looks like we're actually going to break down and out. And that would be down out this way. So because the red is asymmetrical, and we know we've got to come down and hit the orange, we're going to be breaking down out of the red. That would also then give us this white channel that'll end up looking something like this. This downward broadening channel. So then we have 1, 2, 3, and we'll have our 4th somewhere down here before we break up and out of the white. So even when we do set this orange to wherever it ends up hitting, we're going to be breaking up. So we have the orange that says down. We have the white that says down is most likely. But if we don't want to look at the white yet because it's premature, and I agree, it is premature, look at the yellow. We've got the yellow wedge here. We've got a hit there, a hit here, a hit here, and a hit here. So this means we now have to break down and out of the yellow. So that is giving us our new spot down here. So all these wedges agree on down. Even the premature one is most likely going to be this spot, somewhere like this. Then let's not forget that we're still in this downward, whoa, that was awful. This downward broadening red wedge. Okay, drawing is not my MO on a trackpad. But we've got the 1, 2, 3, and then we hit our 4th up here, and then we're doing this swoop. Oh, nope, that's not 3 anymore. That's right, that did shift. So we've got 1, 2, 3, 4. And this swoop down and up. So we should be breaking up here at some point. So maybe after we poke our head out of the bottom of this orange, we could just end up shooting up, finally breaking that red, and then it's anybody's guess. Because this purple wedge that we're in, that started way up here. So we got our 1, 2, 3, and currently 4. We can move this down like this and come a whole lot further down from our third hit down to a fourth hit way down here, or even down here, or, you know, lower yet. So the purple wedge is totally adjustable. Then if you look at the green wedge, this is on the 4 hour now. We had our first hit, second hit, third hit. This was our fourth hit, but when that changed, or rather that did change with this one. So this is now our fourth hit, and we're doing this swoop up and out. But that swoop, as we've seen play out over and over again on Bitcoin, or any coin for that matter, but recently on Bitcoin, it can be enormous. So this swoop, you know, could be taking us way down in here, you know, and then we're hitting like the $6,000-$7,000 mark before we go up and out. There's no guarantee that we're just going to do something like that. So keep that in mind. For the short term then, in summation, I think we're looking at retracing down to at least this Kijin before possibly reassessing, because we might get a bounce up before we come down further. But I definitely think we're coming down to this Kijin. Then I think we're going to be breaking out of this yellow. Then we're going to be breaking out of this orange. And we're going to be setting a new spot here on the white before we start to go back up again to break out of the white line up here, which would also break us out of the orange, which would also break us out of this red. So that's what I'm thinking. You also want to keep in mind too that we blew way outside the Bollinger Band here on the 1 hour, then blew way outside the Bollinger Band here on the 1 hour, and then I think we're going to come down and be doing a similar thing. So as of right now, the Bollinger Band is here. So if we, you know, by the time that this starts to come around and this is working its way down, you know, if it blows way out, we'll be hitting again somewhere in here before we bring that track back up. But just also keep this in mind too. If I jump out to the daily, on the daily, we do have this big breakout of the Bollinger Band, and we do not have that compensated for down here yet. So I think we could be looking at dragging this purple down as this dumps down further, breaking us outside of the Bollinger Band before we can start to go back up again. And I mean, you can see here that we were way outside, then we were outside again right here, but not way outside, and slightly outside again here. But once you get that way outside, yes, it is true. You could have a couple more, you know, wicks that are poking out of it before you get that massive compensation. So, but it's just something to keep in mind. I mean, there's a lot of different information flying at you when you're day trading. And this is, you know, no different here. This is something to keep in mind before you start throwing in these massive longs. We've already blown out here, and we had our, you know, blowout here, and then it was compensated for here. So blowout, slight tick out, blowout. So maybe we will get a slight tick out before we get a blowout, but there doesn't have to be the tick. Often the blowout just creates an overcorrection. And this, here's a slight tick, like I said, coming the other way. I did say that earlier. So there's a slight tick. So then we might have our dump before we go back up. And there's nothing wrong with that. I mean, it's healthy, and it's certainly possible. So just a reminder. But that's it for me today, guys. If you found this video helpful, please like, share, and subscribe. It does help out the channel. I appreciate you watching, and I will catch you in the next video.